quick video today. Yesterday I had to explain the concept of too steep a slope, like the one you're seeing back here in that stock we're going to look at in just a minute, to one of my money manager friends, and it was kind of amazing to me that he couldn't comprehend it. So I repeat this to my Clubhouse members probably every single day. They're probably sick and tired of hearing of it, but it really is something that works so well. It's a simple concept of not chasing stocks higher if they're dramatically overextended for the near term, and the same thing the downside. You don't want to try to short something when it's been dropping too much. And right now is actually a good example we can look at in shares of McDonald's. So let me quickly show you.
So here's a very simple chart of McDonald's, and you can see that basically the stock as of the most recent rally, and this is kind of an evergreen video. It doesn't really matter at what point you're watching this, because it's not really a thing to do right now necessarily, a trade idea. It's more just kind of trying to show you the concept of steep slopes. You can see how this recent rally has now gotten it back to the upper end of what at this point is like a 14-year trend to the upside. So just based on that and the steepness of that most recent rally, which you can see is even steeper than anything we previously saw leading up to the top of this, the stock is now dramatically overbought. Now, from a very simple perspective of just a MACD, we call this a simple oscillator, momentum oscillator. You can see the momentum oscillator as basically at an all-time high right now, or at least at an all-time high as much as the past 5 or so, or actually the past 14 years are concerned. On top of that, right now, just from a valuation perspective, the stock's actually quite expensive, trading at 27 times earnings or so. That's about, certainly over the past 5 years, an expensive valuation. That's certainly not a catalyst to do anything in a stock, but in and of itself, if you take that with a grain of salt and overlay a chart like this, you know, that certainly is something to be somewhat concerned about. Now, if you look at the stock here with my, and you can see here right now, we're looking at a stock that has been trading above that blue line basically for the past like 2 months or so, and a month and a half at the very least. And that's a very, very steep move to have had. So essentially, that's the 8-day moving average. When the stock tends to be trading above an 8-day moving average for more than a couple of weeks, it already gets quite overbought. Now, of course, it doesn't mean you have to short it. You can still certainly ride that trend higher, but at the point when at some point there's a point when it just is too much, and I do think we're getting close to that kind of point.
So the point I'm trying to make here very simply is that when a stock is overbought that dramatically, and this is now an extreme example, but nonetheless you'll find this kind of stuff pretty much all the time, it's not really worth doing something from an intermediate perspective on the long side. So you don't want to be a buyer of something like McDonald's right now, because at some point it's going to correct 5 to 10%, and that's not a big deal for a stock like that. So it really is really important to exercise patience in a situation like that. You'll be able to you find an opportunity to buy that stock lower again. For example, there's a stock out there called NVIDIA, ticker symbol NVDA. That one was dramatically overbought in the last quarter of 2016, and it finally had to correct quite dramatically in order to get back into a point where it was better odds to buy it again. So don't chase charts, guys. That's really my #1 recommendation for anyone. Again, this is not a trade idea. This is just sort of an evergreen tip I will give you from a trading perspective. Hope those are helpful, and I'll see you guys in the next video.